Good afternoon, everyone. It's my pleasure to welcome you all to today's session, how to minimize the discrepancy in LC and ensure timely payments. We are grateful for your participation as these crucial topics in the world of trade finance. Minimizing discrepancy in letter of credit is a key ensuring smooth business transaction and timely payments. It's my pleasure to introduce our guest speaker, Mr. Isaac Tudu, who brings over 25 years of experience in trade finance, having worked with major banks like Indian SBI and ICI Bank. Isaac sir is also founder of Todo Finance Services and an ICC certified trainer of Incoterms 2020. He has trained a professional across the globe. Will share the valuable insight into minimizing discrepancy in LC and ensuring timely payments. I encourage you all to engage with Isaac sir during this session, as his expertise will provide the practical solution to challenges many of us face in trade finance. Without any further delay, Mr. Isaac sir, over to you, please.
Yeah, thank you so much, Arpan. I thanks all the FIO team and I welcome all the participants on this occasion when we are going to discuss topics is basically how to minimize discrepancies in LCs. So just I will share my screen with all of you and we can start our session, right? So I'm sharing my screen with all.
And I request to all participants, please, if you have any question, please use the chat box or raise the hand.
Yeah, so today we are going to cover these topics. Obviously, we will learn each and everything about discrepancies piece. Okay, so first we will cover this how to check MT 700 means LC terms and condition. Then we will cover critical mistakes committed by the exporter or you can say beneficiary in LC. Precaution need to be taken by exporter while dealing with LC. Why is it important to present the document under LC to a nominated bank? And how to avoid discrepancies under LC? And which are the common discrepancies usually bankers would observe? And we will try to cover these documents, draft, invoice, bill of lading, insurance, certificate of origin, certificate of weight, and inspection certificates. What are the common discrepancies usually bankers would observe? Then we will discuss about discrepant documents. If you have come to know that documents are discrepant, then what are the course of action available to you as a beneficiary of the LC? And last, we will cover LC issued by non-banking entity. What are the precautions as an exporter you need to take? And definitely at the end of the session, we will have Q&A. So whatever question query you have, definitely I will answer all the queries, right? So we will start with the very first thing, that is how to check MT 700 terms and condition. So we are discussing about discrepancies. So first of all, we need to understand basically what is discrepancies. So instead of understanding what is discrepancies, we need to understand what is complying presentation, right? That is what we need to understand. If documents are non-compliant means it is a discrepant document. So we need to understand first that what is the meaning of complying presentation. Why this is important? Because what is LC? If somebody asks, then definitely reply would be LC is an irrevocable undertaking given by the issuing bank to the beneficiary to honor a complying presentation. So it is an irrevocable undertaking given by the issuing bank. Who will be the issuing bank? Buyer's bank will be the issuing bank. And this undertaking has been given to whom? Beneficiary. Usually beneficiary will be the seller. What is the undertaking? Undertaking is to honor a complying presentation, right? So we need to understand when exactly issuing bank will honor, or means when issuing bank is committed or bound or obligated to pay. Issuing bank's undertaking is basically a conditional undertaking that beneficiary is able to present the document which are complying ones. So we need to understand what is the meaning of complying. So many of the time we will have this impression that complying presentation means a document should be as per LC terms and conditions. So let us understand what is the exact meaning of complying presentation as far as UCP 600 is concerned. What is UCP 600? This is one of the ICC publication. So all the LCs will be governed under UCP 600, right? So there you will find the definition of complying presentation. In a very simple form, complying presentation means a presentation of document which must comply with first LC terms and condition, second various articles or rules of UCP 600 that are applicable. That means those rules which have not been modified or excluded by the terms and condition of the LC. Why it is mentioned? Because text of the LC can modify or exclude any of the UCP rules. And third, international standard banking practice. So this is what the definition of compliant presentation means. Means whatever documents you have presented under LC need to comply these three things. Means document should be in accordance with the terms and condition of the LC. So that is critical for us to understand what are the terms and condition of the LC. Then definitely we need to have understanding about UCP 600 and what are the international standard banking practice, because documents should be in accordance with those also. So compliant presentation will cover all three aspects. Okay. But today we are going to focus mainly on the terms and condition of the LC. Fine. So let us understand various terms and condition of the LC. So if I ask what is basically what is the structure of the LC? So I have given here one MT700 format. Okay. So this is one of the format, usual format I have given for your information. So here you can see this LC has been issued by ABC Bank, Frankfurt, Germany, right? So you can see here various fields are there. So it is MT700, means it is a LC copy, which usually you will receive as a beneficiary. Okay, fine. So what are the critical fields we need to see? I have highlighted in red also. So here you can see that field number 31D, that is date and place of expiry. So here it is 30th June, India. So we will discuss this, why this is critical, right? So applicant name is there, beneficiary name is there, amount is mentioned, LC amount, currency is there. And this is also one of the critical thing which you must be aware of. LC available with which bank and LC available by what? So here LC is available with any bank, means any bank in India where you can present the document, right? So this is the definition. Had it been any, instead of any bank, your bank name could be there, maybe State Bank of India, right? So State Bank of India, if LC is available with State Bank of India, means State Bank of India is a nominated bank where as a beneficiary, you need to present the document. Okay, and LC is available by negotiation. Apart from this, few of the things, if draft has been stipulated, you need to take care of that. Draft, for this example, it is a side draft. Draft to be drawn on whom? Drawee. Who is the drawee? Issuing bank. Fine. So this aspect we need to take care, and various fields are there. Others, partial shipment, transshipment. Here, port of loading. What is mentioned? Any Indian port. Going to what? Port of discharge, Hamburg. And this is also critical. Latest date of shipment. What is this? 9th June. This is the date you need to take care, because shipment to take place on or before this date. This is critical. So whenever you are discussing with you can say that everything in the sales contract with your buyer, overseas buyer, just ensure that you can give a date in such a manner that by that time you should be able to ship the goods. Then obviously 45A, details of the goods, description of the goods is mentioned. And this is critical for us. Field number 46A, that is documents required under this LC. So you can see here many documents have been asked. Signed commercial invoice, for example. Why I have highlighted the word signed? Because as far as UCP is concerned and ISBP is concerned, invoice need not be signed. Invoice need not be dated, right? That is permitted. But here, what exactly LC is saying? No, boss, we want signed commercial invoice. So despite UCP or ISBP says invoice need not be signed, now terms and condition of the LC will supersede those rules. So you have to present signed invoice. What is this? Packing list in 3 copies. I have highlighted in yellow. Why 3 copies? So if this type of requirement is there, like packing list in 3 copies, we need to understand what is the definition of three copies. Does it mean that three Xerox copy you will present, or three copies of the packing list only will be considered as a complying one? No. Three copies means at least one original you need to present. Two could be copy, either three original or one original plus two copies. That is the meaning of this, right? So understand this small things, because that leads to discrepancies in the document. So based on this packing list in three copies or signed commercial invoice you have not signed, then it will be treated as a discrepancies. Or packing list you have submitted only copies of packing list, then it will be treated as a discrepancies. Issuing bank will raise that original, one original at least has not been presented. Like that, okay, fine. Here bill of lading has been asked, certificate of origin, and shipment advice, that certificate has been asked. And here what is mentioned? Pre-shipment inspection certificate issued by first class reputed inspection agency. So I have highlighted in yellow. Why? Because if as a beneficiary you need to present a pre-shipment inspection certificate, then who is the, you can say, agency from whom you will get this inspection done and certificate to be issued? If your importer mentioned the word like first class reputed inspection agency, it does not have any meaning other than this, that except for beneficiary, any entity can issue inspection certificate. That means what? In this case, beneficiary, you are the beneficiary, you cannot issue inspection certificate, but any entity may issue inspection certificate, right? So going forward, here you can see here, these are the fields you will observe in MT 700, which is the LC, right? So 47A, this is additional condition. One additional condition is there, discrepancies, fees related things are there, insurance will be covered by the applicant. But I have highlighted one important thing, okay? So documents issued prior to the issue date of documentary credits are not acceptable. So LC is saying that no document should be dated prior to the date of issuance of this LC. That means what? We need to take care what is the date of issuance of this LC, right? So go back to the first one, you can see 31st March is the date of issuance of this LC. That means whenever you are presenting any document, none of the documents should be dated prior to 31st March in this case. Otherwise, UCP allows documents can be dated prior to the date of issuance of the LC, but should not be later than the date of presentation. That's what, okay? And here, this is also critical thing, period for presentation, field number 48. Here, LC will stipulate within what days you need to present the document to the bank. So it is mentioned 21 days. Okay, that means what? As a beneficiary, whenever you do the shipment, obviously you need to do the shipment on or before the latest shipment date, which is mentioned here, right? So 21 days means whenever you do the shipment within 21 calendar days after the date of shipment, you must present the document to the bank. Otherwise, it will be a case of discrepancies. If it is clearly mentioned here 21 days, then just if shipment date is 1st January, then by 22nd January, you must be able to present the document. That is the meaning of this. But not necessary in all the cases, it will be 21 days. It is possible that importer wants documents to be presented early, because maybe that sea journey is small and very short. So goods will be reached within 10 days time, and demurrage will start. So definitely in that case, applicant may request this bank, boss, I do not want 21, put it 15 days. If it is mentioned 15 days, then you need to ensure that if date of shipment is 1st January, then within 15 calendar days, you must be able to present the documents. Means is 1st June, 1st January is the shipment date. Documents should be presented to the bank on or before 16th January. Okay. Now, one more thing here, very interesting thing I would like to highlight here. What is the correlation between three dates? What is that? This is the latest shipment date. I have here, it is 9th June. And this is period for presentation in days is 21 days. So there is a relationship between these two. So if you add this 21 days, calendar days in this latest shipment date, you will get LC expiry date, 30th. You can see here, right? So LC expiry date is 30th June, isn't it? So usually this will be the structure that latest shipment date plus date of, you can say, whatever days are given for period for presentation, at that date you will get the LC expiry date. Why these all things are important? Because as a beneficiary, you need to understand by which date you are basically supposed to submit the document. Otherwise, it will be a case of discrepancies, right? With this, let us move forward and understand each and everything in detail. So this is the synopsis of whatever we have discussed, various fields I had mentioned in a different form. Here in one slide, you can see all the information together. So these are the basically fields of various fields of MT700. And like we were discussing that, okay, fine. Uh, you can say that few of the fields are mandatory and few of the fields are optional. So for mandatory field, already I have mentioned M, and the fields which are optional, I have mentioned O, right? So this is the synopsis, you can say, of everything, whatever we have discussed. So let us understand now how to check various terms and condition of the LC. An important thing is that which are the critical field we need to focus when you have received the LC, what you are supposed to do. So you have received the LC, you are very happy that, boss, I have got one export order. But remember, absolutely it is okay that you have received the export order and now payment is assured by the bank. But understand that issuing bank's undertaking is conditional. What is the condition? As a beneficiary, you must be able to present documents which are compliant. So for making the documents compliant, you need to understand the structure of the LC clearly. So what are the various things we need to see? Let us discuss that. Okay. So first thing, obviously, date of issuance of LC. Why this is important? Important is that if any terms and conditions is mentioned that no document should be dated prior to the date of issuance of LC, then you need to take care that date. You should be very careful that no, in that case, no document should be dated prior to the date of issuance of LC. Otherwise, it will be a case of discrepancies. But remember, if nothing is there in the LC terms and condition like that, in that case, documents can be dated prior to the date of issuance of LC. Only thing that documents cannot be dated after the date of presentation. So if any condition is there, then definitely you need to take care this aspect. What is the date of issuance of the LC, right? And ensure that no document should be dated prior to that if LC says or stipulates related to that. But if LC is silent, nothing is mentioned, then obviously documents can be dated prior to the date of issuance of the LC. So this is critical, subject to if you observe any of the terms and condition of the LC related to documents date. Okay. Next is basically we were discussing date and place of expiry. We had seen that it was 30th June, India. Do you think this is important for all of us? What is the purpose of date of expiry of LC? You need to focus on that because date of expiry of the LC is the date by which document must be presented to the bank. Okay. Which bank? Nominated bank. So I had taken the example that LC is available with any bank by negotiation, right? So any bank in India. Why I am saying in India? Because place of expiry is India. Understand this concept. I will go back to the first one so that you can understand this. Here, this is the example. Okay, so here any bank is mentioned, means document must be presented to any bank in India on or before this date, expiry date. But there is also catch that if shipment date, if expiry date of the LC is 31st, for example, 31st January. Okay, expiry date of the LC is 31st January and you have done the shipment on 1st January. Does that mean that you can present the document on or before 31st January? Wait, 21 calendar days have been given to you for documents presentation. That means what? In this case, if 1st January is the date of shipment, you should present the document on or before 22nd January. You should not wait for the expiry date. The thumb rule is that whichever is earlier. Whichever is earlier means what? 21 calendar days after the date of shipment or LC expiry date, whichever is earlier. That is the thumb rule. Let us take another example that you have done the shipment on, for example, 12th January. Expiry date of the LC is 31st January. So will you count that, boss? I have got 21 calendar days after 12th January and I will present the document on 3rd February or 2nd February, whatever date comes. No. Document must be presented on or before the expiry date of the LC, right? So whichever is earlier, whether it is 21 calendar days after the date of shipment or LC expiry date, whichever is earlier, document must be presented by that date. So it is important for us to understand what is the meaning of date of expiry of the LC, right? So it is very simple, right? So this LC place of expiry, it is mentioned India, means in India, as a beneficiary, you should present the document on or before that date. If it is any bank, documents can be presented to any bank, whoever is willing to accept your presentation. Or if it is a named bank like ICICI Bank, Kotak Mahindra Bank, or SBI, then that is the nominated bank under this LC, right? So there only you should present the document on or before this date. Fine. Then another, let me give you one example, whatever I am saying here. So you can see here it is 30th June, India. LC is available with State Bank of India by negotiation. So a State Bank of India is the nominated bank in this case. So as a beneficiary, what you must be doing, what is your role? Your role is to ensure that you should be able to present the document to State Bank of India on or before latest presentation period. Means latest presentation period, you will calculate from the date of shipment plus 21 days or expiry date, whichever is earlier, which place in India, means State Bank of India, right? So if you are able to present the document, for example, on or before latest presentation period or expiry date, your role is over. For example, you have presented the document on 30th June only. So nominated State Bank of India is the nominated bank. They want to examine the document. They may take 5 maximum banking days for examination of document. Then they will courier the documents and document will reach to Financing Bank Dhaka, for example. On 10th July, LC is already expired. Nothing is going to happen to you as a beneficiary. Your role is over. Once you are able to present the document to the nominated bank on or before this date, role is over. Why? Because place of expiry of this LC is India, and in India before this date you were able to present a document. Whether issuing bank receives the document after the expiry date, it doesn't make any difference to all of us. Let us take another example. Here, what is the difference? Here, instead of India, it is mentioned Bangladesh. Means place of expiry is Bangladesh. Usually, this type of structure you will hardly find. Very rare case, right? So it is not the correct structure of the LC. LC should be like this. Okay. So if available with any bank in India, so here India need to be there. If it is State Bank of India in India, then it should be India. Both place, I mean, this available with bank should be located in the place of expiry. But in error, for example, wrongly, LC has been issued in such a manner that LC is available with State Bank of India by negotiation, but place of expiry of this LC is Bangladesh. Means this LC is getting expired in Bangladesh on 30th June. Now you need to be more than extra careful in this case. It is not that you have to ensure like this that, okay, boss, I will present the document to State Bank of India on or before 30th June, my role is over. No. In this case, this bank, issuing bank, should receive the document on or before 30th June. That is the challenge. That means what? You must present the document well before this 30th June to State Bank of India, so that State Bank of India immediately can examine the document and forward the document to issuing bank, so that issuing bank should receive the document on or before this expiry date. Why? Because place of expiry is not India, but it is Bangladesh. So understand the small difference how the document need to be presented, right? So if this is the scenario, then maybe you have to present a document maybe 20th or 22nd, so that within week time, document should reach to the issuing bank on or before 30th June. So this is very important. In this case, there is no such requirement, first case. But second case, remember, if documents are received by issuing bank on 1st July, in this case, then it will be a case of discrepancies. So what is our role? To take care of LCs related whenever you have received the LC, these aspects also you need to take care. If any, you find that this type of situation is there, you can ask for amendment, right? So this is what I was telling. Okay. So in this case, documents to be reached to the issuing bank before expiry date 30th June. Fine. So other thing is basically you need to just check who is the issuer of the LC, who has actually issued the LC. Why this is important? By default, we will imagine that obviously bank only will issue the LC. Yes, most of the LC will be issued by the bank only, no doubt on that. But please understand, non-bank entity also may issue LC subject to UCP 600. And it is our role to check who is the issuer of the LC. Okay. So nothing, no provision is there that it is not that only banks are eligible or allowed to issue LC subject to UCP 600. That is not always the case. Yes, we do receive LC which are usually issued by the LC. But these days, I have observed in few of the occasions, issuer is not a bank, non-banking entity. Okay, so need to be careful, because it leaves exporters vulnerable to fraud risk originated from the non-bank LC issuer. So just ensure that issuing bank is a valid, trustworthy bank whom you are comfortable to work with. Issuing bank's country political or economic position is satisfactory for you. No, lot of countries are facing a lot of challenges these days. Yeah, but you need to take care of that aspect also. And advising bank, usually it would be local reputed bank in India, right? So these are the things you need to take care. When you receive the LC, just check. If you're not able to understand whether really this issuer is the bank or not, better to ask your bank. They will be able to help you out, right? Then beneficiary's name and applicant names and address. So these all are basically hygiene issue. Whatever sales contract you have executed with the importer, based on that, importer will approach his bank for issuance of LC. And when you receive the LC, just check these details are as per sales contract which you have executed with the importer or not. Okay. Why these are all important? Because these things will be captured in the documents, right? Invoice and other documents may have this applicant name and address also, or obviously beneficiary's name also. So ensure that full name of your company with address are correctly mentioned in LC, and importer's company means applicant details also are captured correctly in the LC. These are all hygiene issue, because any wrong spelling mentioned there and you think that boss LC has got a wrong spelling, so I will correct it, that will not work. Okay, so it is important to get it corrected in the LC itself rather than struggling later on. Fine. Then LC amount and tolerance. So this is also critical for all of us to just check what is the LC amount, what is the currency, and if any tolerance is given or not. Okay, so LC amount, no confusion. If you have executed export order with the importer for $100,000, so $100,000 will be there. Okay, so just you check it that same thing has been captured there or not. But important thing is tolerance also. So if you have agreed in the sales contract that quantity may not exactly you will be able to ship. For example, you have agreed in the sales contract that you will ship 100 metric ton. But exactly whether 100 metric ton itself you will be able to ship, or here and there some tolerance could be there, plus or minus 5% or 10%, right? So if any tolerance is there, and you both have agreed in the sales contract, importer and you as a beneficiary or seller, exporter, then please take care that tolerance is duly captured in the LC. If tolerance is given in LC amount, then plus or minus 10% or 5%, whatever has been agreed, should be there in the LC amount. And if tolerance have been agreed in quantity, then it should be appearing against the quantity. And if tolerance is there in the rate, unit price, then that should be captured there. And there is separate UCP article 30 is there, which talks about different type of tolerance, even if so LC tolerance will supersede any other tolerance. So whatever tolerance is mentioned, this is critical because uh, tolerance is there and you do not adhere to that tolerance, then it will be a case of discrepancies, right? Description of goods, this is also one of the critical area. Whatever you have agreed, many of the time, what we will do that we will use the local language for our day-to-day mercantile, right? So whatever local practice is there, we will use that word for goods, finished goods. But when you do the export at that time, you will exactly use whatever words are basically internationally, or you can say that importers understand that word will be used. Okay. So if those words have been used, then please ensure especially your invoice should capture each and every words whichever is mentioned in the LC. That is not permitted that you can use different words. It is similar to that. Because when documents you will present to the bank will see what is the goods description mentioned in the LC, and they will try to figure it out that each and every words which is mentioned as goods description have been captured properly in the commercial invoice or not. Okay, so goods description in commercial invoice should correspond with the goods description mentioned in the LC. There is no leeway. There cannot be any deviation. Yes, other than commercial invoice like packing list or bill of lading, goods description could be in general terms, but remember again, should not be in conflict with the goods description mentioned in the invoice or LC. So these things you need to take care at the beginning itself. If you observe that this is not the correct goods description mentioned in the LC, please go for amendment before shipment of the goods, right? Because many of the time you may generate invoice based on your ERP system, and it will be very difficult to change the ERP system and whatever constant you may face while you prepare invoice, right? So that should be properly understood that whatever words have been mentioned against goods description, each and every word should be captured in invoice. Okay, it should not be mirror image, but each and every word should be there in invoice. Okay, and also just understand that extra goods, even if it is free of cost, in invoice will not be permitted. Fine. Now, documents required is the critical field we need to focus. That is the field number 46A. Why this is important? Because whatever documents details are mentioned, like I was showing in the beginning, commercial invoice, bill of lading, inspection certificate, those are the documents we need to present present to the bank, right? And bank will simply see that, okay, 1, 2, 3, 4, 5, these are the 5 documents stipulated here. All those 5 documents have been received or not, and then they will start examination of those documents. So as a beneficiary, you must read the requirement in this field in relation to all documents without fail, and read any requirement elsewhere in the LC that may relate to one or more of the stipulated document, especially that additional condition you need to read. Why this is important? Because documentation is the core of the LC, and What is LC? I have already told. It is an irrevocable undertaking given by the issuing bank to the beneficiary to honor a complying presentation. So when complying presentation has been made to the bank, only then your payment is assured. That you need to always remember. So what is our goal? Not only doing the shipment, but we need to ensure document should not be a discrepant one. Document should be a complying one. And bank will not see anything other than the document while they do the examination. They will examine the document purely based on the document which as a beneficiary you have presented to them. Okay. Therefore, it is important to give more attention to the document which have been stipulated in the LC. Okay. So LC, for example, should not call for documents that the seller cannot provide or nor set out condition that the seller cannot meet. So you have received the LC. You can figure it out that one of the document it was not agreed by you in the sales contract, but it has been stipulated in the LC terms and condition. Then you should ask for the amendment, deleting that condition before doing the shipment. Because once shipment is done, goods have already left India, then what will happen? You need to present the document as per LC, and that particular document which you had not agreed will create now issue. So without that document, if you do the presentation, bank will raise the discrepancy that that particular document have not been presented. So once discrepancies has been raised means you will be on the mercy of the applicant. You need to request the applicant that this document was not presented. Please accept the discrepancies. So if uh, beneficiary is applicant is okay, or he is in the need of the goods, maybe he will say okay to the, or you can say he will waive the discrepancies, and based on the applicant's waiver, issuing bank may also agree to accept the discrepancies. But in worst case scenario, scene could be different, right? So scene could be different in the sense maybe there is a price escalation. In the meantime, applicant would like to bargain with you that, okay, we will accept the discrepancies, but please give me some discount, something like that. And in worst case scenario, maybe that guy will say, we will not accept the discrepancies. Then what will happen to our entire situation? We were assured under LC that payment will be received. We have shipped the goods. Now issuing bank is saying that documents are discrepant. And remember, when documents are discrepant, there is no undertaking. Undertaking is there only when complying presentation has been made. So it is very critical for all of us to focus on field number 46A, which are the document you will be able to submit. And not only document, you need to understand document according to terms and condition you need to prepare and submit. Otherwise, it will be a case of discrepancy. So focus on this area. If you observe any of the terms and condition you will not be able to meet, then before doing the shipment, ask for the amendment. This is advisable. Then additional condition I was talking, field number 47A, many of the time someone can ignore this also. Understand? Yes, UCP says if any of the terms and condition mentioned in additional condition, compliance of that additional condition, if no document has been stipulated in document required, then that need to be treated as non-documentary condition. And non-documentary condition means that condition need to be treated as not stated and should be disregarded. Okay, so absolutely no confusion of that. For example, here LC says full set of bill of lading, and non-documentary condition says carrying vessel must not be more than 10 years old. So this is non-documentary condition. So compliance to this non-documentary condition, no document has been stipulated in this field number, means a certificate from the shipping company is certifying that vessel is not more than 10 years old. That documents has not been stipulated. So simply we can consider this additional condition as not stated and need to be disregarded. But remember, whatever bill of lading document has been stipulated that we need to present, right? So when we present the bill of lading, and bill of lading does not say anything about age of the vessel, it is not a case of discrepancy. Bill of lading need not comply this additional condition. Means if it is silent about the age of the vessel, no issue. But you have submitted bill of lading to the bank, and in that bill of lading, it is clearly mentioned age of the vessel. It is mentioned vessel built on, and you can count that it is more than 15 years, then you cannot ignore. So be careful about non-documentary condition also, because it will have some impact when you present the document. Though compliance of this condition is not at all needed. If none of the document of our indicates carrying vessel is not more than 10 years old, absolutely okay. We need not have to comply this additional condition. But if any of the document which have been stipulated and we have presented to the bank indicates that vessel is not within this time period, means 10 years old, it is more than that, then it will not be a complying presentation. It will be a case of discrepancies. So just take care of that. Otherwise, non-documentary condition must be considered as not stated and should be disregarded. But there is a condition which I was talking to you, right? Now, payment terms. This is also one of the things we need to understand. Where you will find the payment term, LC available with, for example, we had seen State Bank of India or any bank, there it would be mentioned LC available by. Okay, so that is where you will find what is the payment terms. Payment terms means what? When exactly as a beneficiary you will get the payment under LC. So as far as UCP is concerned, LC can be made available by 4 category: side payment, deferred payment, acceptance, or negotiation. So when LC is available by side payment means you as a beneficiary will be paid at site when complying presentation has been made. No confusion. But if LC is available by deferred payment or acceptance, that means you will get the payment after some time. Maybe it is mentioned 90 days from bill of lading date. So if bill of lading date is 1st January, you will get the payment. You need to calculate 90 days. Maybe it is 1st April. So on 1st April, actually, you will get the payment when LC is available by deferred payment or by acceptance. What about LC available by negotiation? In that case, maybe if nominated bank agrees, you may get the payment upfront before the due date. Okay, so these are the payment terms you need to take care. From where you will get this payment term? Obviously, this need to be discussed with the importer in the sales contract itself, because all the terms and conditions which you had agreed in the sales contract, importer will jot it down in the LC application form, and bank will issue the LC not based on the sales contract, but bank will issue the LC based on the LC application form submitted by the importer. Okay, so it is the duty of the importer to capture all the terms and conditions of the sales contract in his LC application form. And it is a duty of the beneficiary, whenever you receive MT700, just check whatever you had agreed in the sales contract, those terms and conditions only have been captured in LC terms and condition or not, right? Then Incoterms. Many of you are doing the cross-border transaction because it's being exporter. So it is obviously you will decide how you will deliver the goods. So you will use the Incoterms, right? So presently we have got Incoterms 2020. There are total 11 Incoterms. Out of 11, 4 can be used for shipment by sea and inland waterway transport only. And those are FAS, FOB, CFR, and CIF. And 7 Incoterms rule is meant for any mode or mode of transport: X-Works, FCA, CPT, CIP, DAP, DPU, DDP. Understand the consequences of Incoterms when you use or you agree to any of the Incoterms. Where exactly Incoterms will be used? Incoterms will be used in the sales contract. So you can say that based on the Incoterms, seller and buyer both have got clear cut understanding about what is their role. So as a seller, you will know what is your role, what is your obligation, what is your risk, and what is your cost. So Incoterms will tell both seller and buyer what is their role, means obligation or task, what is their risk, where exactly risk gets terminated from seller to buyer, where exactly risk gets shifted from seller to buyer. So point of delivery, right? So that is captured beautifully in all the 11 Incoterms. So you may decide any of the Incoterms based on your comfort understanding, right? So when you use the Incoterms in sales contract, and that Incoterms have been basically stipulated in the LC, need to be slightly careful. Okay. For example, if you use the word CIF, Incoterms rule, CIF means seller need to take care of the carriage part, entire thing, right? So you cannot say terms in the LC that freight need to be collected, right? So freight need to be prepaid, isn't it, in bill of lading, because seller is responsible for freight up to port of discharge as far as CIF Incoterms is concerned. So there is no point in LC. It should be asked that bill of lading to show freight collect. Instead of that, it should be freight prepaid. Like here I have mentioned that you have agreed to Incoterms FOB. That is a very common Incoterms rule. Usually we will use, most of the exporter uses this. Okay, so FOB rule is not appropriate where goods are handed over to the carrier before they are on board the vessel. Because in case of FOB Incoterms, when exactly seller delivers the goods, when goods are shipped on board at port of loading, vessel carriers will be arranged by the buyer. Okay. But what happens actually in case of you do the shipment in container, you yourself is not going to take that container to load the goods on vessel. Who will do? Carrier will do. And carrier will take that position of the, you can say, container at container terminal. So effectively you can see there that you are not onboarding the container of goods shipped on board till the time delivery doesn't take place. So in case you have this situation where you basically uh, give the container to the carrier, not loading the container on the vessel, then proper Incoterms should be basically FCA rather than FOB. Or you have agreed to the Incoterms X works. X works is meant mainly for the domestic sale transaction. Okay, Incoterms can be used for both type of transaction, domestic as well as cross-border, export import. X works here, there is very difficult for any of the importer to use this X works, because if you receive any LC where you find X works, you will be happy that as an exporter or seller, you do not have to do anything. But because in this case, delivery takes place when goods are placed at the disposal of the buyer, right? So you will be happy, but understand the challenges that importer will face, because who need to take care of the export formality in India? Buyer, importer. How that guy will be able to do, we do not know. Although this is not your look after, because sell already delivery is done when goods are placed at the disposal of the buyer. But understand, usually what will happen that in case of X was, you have received the LC and bank usually will stipulate one of the transport document, any of the transport document, right? And who is responsible for doing the transport carriage and all those things? Basically buyer. You will not have anything to present to the bank that this is the transport document. So if bank is to stipulates airway bill or bill of lading, how will you know? How will you get that? Because you have not done the shipment in case of X works. Everything is being done by the importer. So very difficult, right? So what are the documents will be stipulated when you agree with the X works, export sale, and you ask for the LC. So these are the small things you need to take care when you deal with the LC terms and conditions. When an Incoterm rule is stated as part of the goods description in the LC, the commercial invoice must exactly reflect the stated Incoterms. For example, if it is a CIF Singapore Incoterms 2020, means you need to pay carriage up to Singapore. You have loaded the goods maybe at Port Noah Shiva. If these wordings are there, exact the same wording need to be captured in commercial invoice. Okay, so if you mention in commercial invoice like CIF Singapore, you have forgotten to mention Incoterms 2020, or you have mentioned simply CIF Singapore Incoterms, you have forgotten to mention 2020, then it will be a case of discrepancies. So be careful about these small things, right? So whatever is mentioned, exactly copy paste in your commercial invoice. Port of loading and port of discharge, this is also critical. You have agreed in the sales contract from where you will do the shipment and where exactly goods are going to do. But if it is mentioned clearly in the LC that port of loading is Port Nhava Sheva or Kandla going to Singapore, no challenge. Remember, it could be like not the exact port. You want flexibility. So what you have requested the importer that instead of putting one port like Kandla, Port Nhava Sheva, like you say that port of loading any Indian port, okay, or port of discharge any of the importer's country port. Remember, that could be the terms and condition of the LC, but when you present bill of lading, nowhere it should be mentioned any port in India. Actual port of loading, actual port of discharge need to be mentioned, like Kandla port, Nhava Sheva port. Actual port from goods, I mean, a port of loading need to be captured instead of any port in India. These are the small things you need to take care. Then charges, this is the critical part. As a beneficiary, you need to understand which are the charges you need to bear. Okay, so that will be captured in the LC itself. So this field will indicate which of the charges applicant or beneficiary need to bear. Okay, so LC is a costlier payment terms when you compare with the open account basis or advance payment or documentary collection. Yes, because LC issuing charges will be there for the applicant. But what about the beneficiary? Lot many charges we need to bear. Okay, so be careful about the charges because this is one of the critical aspects that will reduce your profitability. Okay, if you do not give enough attention to LC charges as an exporter, your profit margin may be reduced significantly. Therefore, you have to understand your approximately cost of working with a LC since beginning of the transaction. So each and every charge, you need to figure it out. Who will bear what charge? It is usual practice that applicant will bear the charges of the issuing bank and the beneficiary will bear the cost of the other banks. So it is the usual practice. So you need to calculate what are the charges you need to bear, whether it is charges of advising bank, whether it is charges of negotiation, discounting, or whether you have to bear reimbursing bank charges also, or discrepancy charges. This is the very common issue, pain area for any exporter, right? You have presented the document and documents are discrepant. Bank will deduct maybe $100, $200, and you do not have any control over those things, I mean, because all other charges other than the issuing bank charges, and that will be mentioned in the LC itself that discrepancy charges need to be borne by the beneficiary. So be careful about the charges because this is one of the pain area for all the exporter. That is what I have understood. Period for presentation already I have discussed, so we will not go into that. What if no period is mentioned? That 21 days was mentioned there, na? Period for presentation in days. Nothing is mentioned. It has been kept blank. If it is blank, nothing is mentioned, then there is one UCP rule which says document must be presented within 21 calendar days after the date of shipment. By default, that clause will be applicable. So remember always to take care of that. If something is mentioned like 21 calendar days, that will be prevailing, or 15 days, that will prevail. If nothing is mentioned, then UCP article will be applicable. That document must be presented on or before, you can say, within 21 calendar days after the date of shipment. By default condition is there. We call it default presentation period, right? So if nothing is mentioned, default presentation period will come into the picture. So be careful about that because why this is important? Because ultimately you have shipped the good. You will be dependent on your CHF agent, right? And you will be expecting, boss, today or tomorrow you will get the bill of lading. But there could be delay in receiving the bill of lading, hard copy, physical original bill of lading, right? And already shipment has taken place. Now you have to count down whether it is within 21 calendar days or not. And obviously you need to prepare all other documents. Maybe certificate of origin, you need to get it done from Chamber of Commerce. There you may take time. Yes, commercial invoice you can prepare, but what about the other documents? maybe inspection certificate is involved, it is taking time. So always ensure that within 21 calendar days, you should be able to present the document to the bank. Otherwise, even if all the documents are complying, due to this reason, it will be treated as discrepant. Partial shipments, you need to take care. If partial shipments are not allowed, then need to ensure that whether the documents are consistent with a full shipment or full drawing or not, if it is not permitted. But if it is permitted, then if it is in respect of a second or subsequent, because partial shipment allowed means you will do the part shipment. If total quantity is 100 metric ton, you will do the shipment of 20 or 25, or next time 20, 25, like that. So whenever you are doing the second or subsequent shipment, please ensure that all the drawings must be consistent with the amount and quantity of goods that are remaining and any unit price, if any. If LC is silent, LC does not say anything whether it is partial shipment is allowed or partial shipment is not allowed. That place, field number 43P is silent, nothing is mentioned. Then by default, partial shipment is allowed if LC is silent. Okay, so this you need to take care. Just check whether it is preferable that you ask your applicant that partial shipment should be allowed. You can do definitely full shipment, no issue, but that gives you a lot of flexibility, right? Like that transshipment. This is the word many times people will get confused. What is the meaning of transshipment? Transshipment, many of the time you will find field number 43T of MT700, it will be mentioned not allowed. When it is mentioned not allowed, then you need to understand what is the meaning of that. First you need to understand what is the definition of transshipment. Transshipment means unloading of goods from one vessel and reloading of goods to another vessel between port of loading to port of discharge. So for example, port of loading is Port Nhava Sheva going to Port Singapore. In between, during these two port, if goods are unloaded from one vessel and reloaded to another vessel, and that is evidence in the bill of lading, it is a case of partial shipment, right? But remember, in case goods are basically shipment is done in container or trailer or large barge, and entire shipment, entire carriage is covered by only one and the same bill of lading, then even if transshipment is evidence, it is permitted. So no need to worry about that. Okay. So you need to understand the concept. Goods are going from India to Australia. So goods were loaded at Mumbai port, for example. Then when vessel reaches to Singapore, goods were unloaded and reloaded to another vessel. Now that another vessel goes to Melbourne, Singapore. So in this case, Singapore transshipment took place. So Singapore acting as a transshipment hub to facilitate the transfer between vessel, as there is no direct shipping route between India and Australia. So understand the challenges any of the exporter, as an exporter, you will face. You will have no control how the movement of goods will take place. Okay. So transshipment are not controlled by exporter. And almost all the container carrier do practice transshipment between port of loading and port of discharge. So this is the critical part you need to understand and take care of this. Okay, so make sure that transshipments are allowed under LC. And it is what you have agreed in your sales contract also. You will, in sales contract also, you tell them that transshipment is going to happen. So allow it. Okay, that is the best thing you can do it. What about this two different field number, reimbursing bank related or instruction to paying, accepting, negotiating bank? Is this important for all of us? Not directly, but this will give you a hint when you will, how the bank will be able to get the payment from the issuing bank. Whether bank need to claim the fund from any third bank, which is a reimbursing bank or not. So simply just you can take care. It is a bank to bank reimbursement issue. So you can have a look and you can decide that, okay, it is okay for me, right? So reimbursement instruction remains critical for the exporter because it will determine how and when, as an exporter, you are going to make the going to get the payment if you present the documents which are complying, right? Now, this is something you need to take care that none of the document should be stipulated in field number 46A, documents required, which need to be issued or signed or countersigned by the applicant. This is very dangerous. LC should not require presentation of documents that are to be issued, signed, or countersigned by the applicant. But for any reason you yourself have agreed was okay, fine. One of the document need to be countersigned by the applicant. I don't know the reason. Maybe reason could be different, Ivina. So that type of, if clause is there, then you need to be very, very careful. If nevertheless LC is issued including such a requirement, beneficiary should consider the appropriateness of such a requirement and determine its ability to comply with it or seek a suitable amendment. So today you have agreed that, okay, one of the document need counter signature of the applicant. So you have shipped the goods and that guy is not cooperating, importer is not cooperating, then he is not counter signing the document. Then how will you be able to do a compliant presentation when you submit the document without counter signature of the applicant? And this is one of the stipulated condition. Bank will say it is not countersigned by the applicant, so it is a case of discrepancies, we will not make you the payment. So please be careful about that. You should remove all such detected terms and conditions before doing the shipment of goods. Ask for the amendment. Simple. Confirmation instruction could be there in field number 49, where issuing bank will request or authorize advising bank to add the confirmation. This is good for you, but only thing that maybe confirming bank charges you need to bear. But confirming bank will eliminate two risks. What? Issuing bank default risk and issuing bank's country risk. We know a lot of issues and challenges are there in neighboring country, Bangladesh. So if you get the LC from Bangladesh, maybe you will get the payment under LC with delayed. So better to get those LCs confirmed by any of the local Indian bank, maybe any of the nationalized bank or private bank. I mean, absolutely okay. So when confirmation is added, confirming bank is there, confirming bank gives you definite undertaking to honor or negotiate a compliant presentation, and confirming bank undertaking is in addition to the undertaking which is already given by the issuing bank to you. So in case of confirmed LC, you have got two undertaking, one from the issuing bank, obviously under LC, another you have got now from the confirming end. Where this confirming bank is located? In our country only, in India. And that bank may be your bank only. You are banking with Kotak Mahindra Bank, ICICI Bank, State Bank of India. Your bank may add the confirmation, but they will add the confirmation or not, it will be their sole discretion. But if they have added the confirmation, means your life becomes easy. You do not have to worry what is happening in other country, issuing bank's country, or what is happening with the issuing bank. Okay. So you can eliminate these two risks when you get confirmation from your local bank. So in conclusion, whatever we have discussed in MT7 and LLC, do not assume anything while dealing with LC. Working with LC is not easy. It requires high level of expertise and knowledge. We have discussed lot many things in brief. Additionally, it is very time consuming. The terms and conditions of a LC are independent of the underlying sales contract, even if LC expressly refers to that sales contract. Understand, you have agreed each and everything in the sales contract. Based on that, only applicant has requested issuing bank to issue the LC. And now LC has been issued and you have received the LC. But moment LC is issued, it is no longer dependent on the sales contract, right? So sales contract is executed between exporter, means you, and buyer importer. Bank is no longer involved in that. But once LC is issued, it is bank who has given the taking to you as a beneficiary. So applicant, importer is not a party to LC. Understand this. So if compliant presentation has been made to the issuing bank must honor whether there is sufficient balance available in the account of applicant maintained with the issuing bank or not, right? So you are little bothered. What is the current, you can say, financial position of the applicant? You need not have to worry after getting the issuance. Yes, you always need to do the due diligence on the applicant. That is another issue. Before doing any sales contract, you must be doing this. I mean, who is the importer? What is the background of that? What is the track record of payments? You can ask for the, you can say, opinion report on the applicant if you are doing the first time dealing with that guy. Otherwise, if you have got a, you can say, track record is there, then it is known that importer has got a good, healthy, you can say, financial position. But despite that, if you have received the LC, means you do not have to worry about whether there is sufficient balance available in the account of the importer or not, because it is bank's obligation, issuing bank's obligations. Okay. So that is beautiful thing about the LC. So as an exporter, if you have got any doubt about any of the terms and conditions you are not able to understand, it is better to approach your bank for professional advice. So both exporters and importers are protected by LC in certain amount if they act properly. So this was basically different terms and conditions of the LC. Now quickly we can see here the topics now, critical mistakes committed by the exporter in LC. Okay, so I have jotted down brief topics, right? So let us discuss one by one. Failing to negotiate the terms of LC during the negotiation of the sales contract. So understand the basic document you will execute is basically sales contract with the importer. Based on the sales contract only, all the terms and conditions will be captured in the LC. Means importer will request those terms and conditions in LC application form, and based on the LC application form, issuing bank will issue the LC and ultimately you will receive. So negotiate proper terms and conditions in the sales contract itself. Okay. And if you receive the LC, you find terms and conditions of the LC is something different than the sales contract terms and condition which you had agreed, ask for the amendment before doing the shipment. Then another thing is that not considering the cost incurred by LC before concluding a sales contract. So cost is one of the critical parameter for any exporter. So please do take care what are the costs you will be incurring. Ultimately, you have sold the goods, isn't it? In rupee, there is, I mean, you are assured, but here lot many risks could be there, export related, although exporters will be more than happy in today's situation. But this situation could be adverse as far as rate is concerned, right? So 85, 86, 87, 88, whatever it goes adverse, I mean, in favor of exporter, you'll be happy. But remember, it could be reverse. Rupee may become strong. That is one of the risks. And what about the bank's charges? Lot many banks deduct lot many charges. Be careful about those things. Failing to ask for a draft LC to be made available for review before it is issued by the issuing bank. So it is a good practice as an exporter. What you can do is before issuing bank issue the LC, you can ask for the draft LC. Terms and condition will be similar to the actual LC, but LC is yet to be issued. It is in the draft form. So you can just go through once. If any confusion is there, you can ask your banker who will be expert in that, ask whether this condition is good for my or not. You can get it deleted. So there will be, so at the beginning only, you will be able to remove the things. There is no need for going for the amendment. So amendment cost and all those things will be saved if you ask for the draft LC. Not reviewing LC when they are received. So you have received the LC. What you will do? You will simply say, boss, this is the amount, $100,000, 50,000, done. Up to what time shipment need to be done. But remember, a lot many things which we have discussed, you also need to review. Each and every word need to be reviewed properly. Shipping goods before receiving a clean and workable LC. Many times, since you have got a very good order, you have got a very good pricing of the goods. And if importer says we have approached the issuing bank, we are about to issue the LC, you can dispatch the goods. And since you have to do the business, there is a competition, a lot of things are there. So that you need to take care. You do the shipment before even you receive the LC. Not making sure the document requirement are consistent with the Incoterms in the sales contract. Already we have discussed that. Not being able to adhere to all the terms and conditions that is stipulated in the LC. So these things always read LC terms and conditions in detail. Understand that you should be able to comply all the terms and conditions. Having the documents prepared by someone not experienced with LC and the associated rules and regulations. So understand bank is going to examine each and every data mentioned in every document. Say 4 documents have been asked: commercial invoice, bill of lading, packing list, and certificate of origin. For example, all documents have been presented. Document examiner will examine each and every words mentioned in certificate of origin or bill of lading or invoice or packing list, right? So unnecessary data need not be written there. Whatever is mandatory need to be captured. Because more you write there, more they will scrutinize. And more chances or probability will be there that they may raise the discrepancy due to additional data which were not needed to be incorporated in that particular document. Lack of communication with third parties involved in the LC transactions. So whenever you find any challenges, you need to be proactively try to solve it out. You need to coordinate with, you can say, logistics, CHF agent. If you, for example, insurance document has been asked, CIF, CIP. In that case, Incoterms, seller is obligated to take the insurance, right? So, how the insurance document need to be prepared based on the LC terms and condition, you need to be in touch with the insurance guy. What is your requirement under LC? So insurance guy will say that this is my structure, that is how we issue, you take it or leave it. Now, if you take that, it will not be a compliant presentation under LC, maybe not necessary, and unnecessary due to third party person. I mean, your entire presentation is discrepant. Even if one discrepancy has been raised in any of the document, means it is discrepant. So this is very important to coordinate with a logistic guy or insurance guy, or maybe inspection certificate is there. Maybe you have to get a certificate of origin. All those things where you yourself is not preparing the document, please take care of that. Not querying discrepancies if you believe them to be valid. So obviously, most of the time, issuing bank will raise the discrepancies, right? So being because maybe there is no such knowledge is available, so you will not be able to counter those discrepancies if you feel those discrepancies which have been raised by the issuing bank are not valid one. For the sake of raising the discrepancies they have raised, but if you counter it properly with the various rules, maybe those discrepancies can be removed, right? So these things you need to take care. I think that these are the critical mistakes any exporter can do it. Okay, so now few of the things I wanted to highlight. What are the precaution you need to take as an exporter? Okay, so first thing, obviously, check the terms and conditions, the LC in detail. Okay, so if you observe any of the terms and conditions, you will not be able to comply. Ask for the amendment before doing the shipment of goods, right? Verify that the LC is genuine. Why? Why this is important? There could be a risk that the LC may be fraudulently issued, and this is critical one. And a lot of things are happening these days. Okay, the beneficiary may ship the goods against the apparent bank undertaking to pay that does not in fact exist. So when these days, we need to be more than extra careful, because you inquire in net. You don't usually go and meet physically with the buyer, right? There is no physical meeting. So over the net, over the chat, over the WhatsApp, over the email, you will do the entire thing. Inquiry, PO, everything. Now, someone can take advantage of that. And you know that breach of data is a common thing, has taken place. I mean, lot many people would get fraudulent LC. So the guy who wants to do the fraud is aware that you are eagerly waiting for one export order, LC. So simply fraudulent LC you may receive via courier, and you may think that it is the same order. Okay. So you will do the shipment. Later on, when you will present the document to the bank will simply say, boss, we do not think that this bank has issued this LC, or this bank does not exist, which has been mentioned as an issuing bank. So what to do? Goods have already been dispatched. So please take care of that. Check the credit worthiness of the issuing bank. How will you know? Ask your bank. Whenever you do any contract with any of the importer, ask, you will be able to give LC from which bank, and just take the SWIFT code and you ask your bank what is the credit standing of this issuing bank, and also check where that issuing bank is located, whether that country is basically facing any financial or you can say political challenges or not. I'm not sure how many of you will take LC from Bangladesh or LC from Sri Lanka, and you'll be stuck. I mean, there could be challenge in recovering the money, because not because of only issuing bank, but because of country's position, right? Many of the country central bank will say no outward remittance can be made, because they all are facing liquidity issue, foreign exchange challenge. So their priority will be different. They want to use the foreign exchange. They want to conserve the foreign exchange for import of crude oil, for example. So uh, whatever goods we have supplied to that country, that will have a second priority. So central bank may put a restriction, boss, only up to 50,000 can be remitted, and your goods valued is 80,000. Then what to do? That issuing bank wants to make the remittance, but maybe there is a restriction. So take care of those country risk also. Check who is the actual issuer. This we have discussed. LC can be issued by an entity other than a bank. Beneficiary should exercise caution before shipment of goods and placing reliance on the LC as its guarantee of payment. By taking these precautions before the shipment of goods under LC, exporter can mitigate various risks and ensure successful international trade transactions. Another aspect, one more critical thing I would like to highlight here is why it is important for you as a beneficiary to present a document under LC to a nominated bank. So we had seen LC available with, for example, LC available with State Bank of India, means State Bank of India is the nominated bank under that LC. Why, as a beneficiary, you should present document to the nominated bank? Few of the things I have mentioned. Because that is the bank authorized by issuing bank where the LC is available. And that is the bank authorized by issuing bank to honor or negotiate a complying presentation. That's why as a beneficiary, you need to present the document to nominated bank. Please understand, no other bank is authorized to handle. As far as UCP is concerned, if that bank is not mentioned as a nominated bank. So you are banking with bank A and LC is available with bank B, means bank B is authorized, means bank B is the nominated bank. What will happen if you present the document to bank A, means your bank? Bank A position is not recognized under UCP. Effectively, bank A should forward the entire set of document to nominated bank, bank B, and in turn, bank B should forward the document to the issuing bank. So understand that is in complying presentation. So as a beneficiary, if you are able to present the document to the nominated bank on or before the expiry date for presentation, your job is over. If place of expiry of LC is your country, I had given the example, isn't it, that LC expiry place, right? So issuing bank has to honor the complying presentation, even if they receive documents after the expiry date. So if expiry date is 31st January, nominated bank is ICICI Bank. So you present a document to ICICI Bank on 31st January, done. If issuing bank receives the documents on 10th February, doesn't make any difference to you. So that's why you need to present a document on or before the expiry date to the nominated bank. What if you present the document to any other bank which is not a nominated bank? Then if documents are received after the expiry date of the LC, issuing bank may raise the discrepancies because your bank is not a nominated bank, right? So one of the aspects of why you need to present the document to nominated bank could be financing. Okay. So we have discussed that in case of LC available by acceptance or deferred payment, payment is not going to happen immediately. Maybe you will get the payment after 90 days from the bill of lading. Maybe 31st March, as per due date, you will get the payment. But if you present the document to nominated bank, documents are compliant, maybe nominated bank will be willing to discount or prepay and give you the money upfront before the due date, right? So that could be one of the scenario, okay? And another thing is very important, and that is protection for loss of documents. So if a nominated bank determines that a presentation is complying and forwards the documents to the issuing bank must honor or negotiate or otherwise reimburse that nominated bank even when documents have been lost in transit between the nominated bank and issuing bank. So understand the importance of nominated bank. So what exactly is the meaning here? That maybe HDFC Bank is the nominated bank and you have presented a document to HDFC Bank, right? HDFC Bank has examined the document and they have found that documents are compliant. And obviously, they need to forward the documents to the issuing bank. And what they have done, after they have found the documents are compliant, they have simply forwarded the document to the issuing bank. But in transit, documents are lost. In transit, documents are lost. Means issuing bank has not received the original document. Now, you will inquire why payment is not coming. So your bank will follow up with that. Issuing bank will say, we have not received the document. You go and track the documents. Documents are not traceable in DHL courier, whatever reason. These days, it is not going to happen. But worst case scenario, if it is there, I can tell you, issuing bank is liable to make the payment to you, even if they have not received the original document. But the condition is document must be presented to the nominated bank. That is the first thing. Second thing, documents are examined by nominated bank and they have found the documents are complying. If you fulfills this, issuing bank is liable to make the payment even if they have not received the original document. Okay. So this is why as a beneficiary, we need to present the document to the nominated bank. Going further, a few more aspects we can discuss how to reduce the discrepancies, right? So understand the situation that whenever you will present the document, most of the time on first presentation, it will be treated as discrepant. That is the irony. And I can tell you, usually 65 to 70% time, whenever documents are presented on first demand, discrepancies are raised by the bank. That is the not good part. Not good part for anyone. Okay, so understand the basic thing that what is LC? LC is a payment mechanism. The very purpose of the LC is basically to make the payment to the beneficiary for the goods supplied. But unfortunately, if documents are found discrepant, then payment maybe get delayed, or in worst case scenario, payment will not be made at all. So that is a very riskier proposition. And around 60 to 70%, you can say, it is rough estimate that documents are refused on first presentation. That is a very critical part we as a beneficiary need to understand. We have received the LC, but what is the status of that? Should we properly rely on that? That definitely we are going to get the payment. Challenge. I mean, so if you are able to present documents which are complying, then only we can say that boss, nothing doing, issuing bank is going to make the payment, right? So whilst this does not necessarily mean that the beneficiary will not receive settlement at all, it is a matter of significant concern as it results at the very least in a delay of settlement or financing and a resultant increase in bank's fees. In addition, it may delay delivery of documents to the applicant, right? So if discrepant documents are there, what will happen? It will not be released to the applicant unless applicant gives okay or consent or waive the discrepancies. Otherwise, it will not be given to the applicant. It will remain with the issuing bank. Issuing bank has the choice to return the document also. That is a dangerous thing. Dangerous in the sense for exporter, for the beneficiary. And for that, issuing bank need not even ask to the applicant. Worst case scenario could be there. But usually issuing bank will not do like that because they also need to do the business. They have issued the LC on behalf of the applicant. So most of the time, 99% times, they will definitely approach the applicant, and based on the applicant response, only issuing bank will take a call. But not necessary always issuing bank 100% they are obligated to give their consent on the discrepancies. So it is possible that applicant has waived the discrepancies, but issuing bank will say nothing doing. We are going to return the document, and absolutely nobody can stop issuing bank. It will be the sole discretionary of the issuing bank whether they want to accept the waiver given by the applicant on the discrepancies. So you may think that boss, applicant has already accepted the document, then therefore issuing bank must accept the discrepancies. No, but most of the time they usually accept. That is another issue. Okay. So many of the problems that arise at the document examination stage could be avoided or resolved by the respective parties through careful attention in detail in the LC application and issuance of LC thereto. Applicant and beneficiary should carefully consider the document required for presentation, which are the documents you will be able to submit, by whom these documents are to be issued, what should be the data contained in those documents, and what should be the time frame by which documents need to be presented. These things need to be discussed upfront. As a beneficiary, you should agree in the sales contract, boss, I'm okay with the 4 documents which I'll be giving you. Okay, so I will give you invoice, I will give you bill of lading, I will give you insurance if it is CIP or CIF, or maybe you can exclude if other, and maybe packing list, certificate of origin, whatever. Clear cut, you need to understand mentioned in the sales contract, and who should issue those documents, and what should be the data contained in those documents, and by what time those documents need to be presented to the bank. Those things need to be discussed upfront. If you are comfortable, execute the sales contract, you will get the same terms and condition in the LC, and you will be able to comply with the LC terms and condition. Otherwise, it will be a case of discrepancy. So you are the manufacturer. You know that this much of quantity manufacturing itself will take a time up to, you can say, 31st March. So there is no point you agree with buyer, importer, that I will do the shipment on 15th February. If you agree, then what will happen, that LC will say latest date of shipment 15th February, and for you very much know that manufacturing process will take time, or maybe you had correctly anticipated due to due to bulk order, maybe you are not able to manufacture those much of goods within that time. So be careful about the timing and everything. Okay, so only documents that are necessary, like custom clearance purpose, should be required at the LC. If feasible, it is recommended that documentary required to be limited to invoice, transport document, and few other documents if you are okay with those documents. Otherwise, limited documents should be stipulated in the LC. Then through review of LC by confirming bank to identify and understand any risk and areas of possible contention. So it is better that LC to be reviewed by bank, maybe advising bank. Few of the banks have this policy that they will review the various terms and conditions of the LC. They will tell you that these terms and condition is not very okay for you. So they will guide you. Most of the bank will simply advise you. They will not tell anything about LC. They will simply take the printout. They will put the covering letter. They will put the stamp, and they will simply forward. Okay. So it will be your responsibility. Okay. So choose a bank who can give you the guidance, right? So beneficiary to clearly understand the implications of providing certain documents and ensure they can meet time frame and deadlines. Close and constant communication between seller, logistic documents provider. Why? Because already if LC says bill of lading to be issued in this manner, then your logistic provider need to understand this is how the bill of lading need to be presented. So accordingly, he should prepare, right? Address problem prior to presentation of document. This is must. Avoid to the maximum possible LC that exclude specific articles, sub-articles of UCP. So few of the times you will find that LC will exclude any of the UCP article. Be careful why that article of UCP or sub-article of UCP has been excluded in the LC. What is the implication of that? If LC exclude that UCP article, whether another rule has been incorporated or not, those things need to be checked. Improve drafting of LC by issuing bank. So it is important that issuing bank should improve the drafting. There should not be any confusion about understanding what is to be done under LC, right? Enhanced attention in detail and reflection as to whether or not all requirements are actually necessary will provide benefit to all involved parties. Avoiding the incorporation of non-documentary condition into LC will result in improved clarity. So beneficiary to assess whether there is sufficient time to manufacture, produce, or procure the goods, to package and ship them within the latest shipment date, and to present the documents to the bank within the latest date or within the expiry date. For so that you need to take care. Beneficiary to ensure that any required amendments, if needed, to be asked on or before the shipment, right? So it is advisable for beneficiary to have a copy of UCP 600 and ISBP 821. These are two ICC publication. So it is highly recommended that if you are into export business, please go through these documents. It will help you to understand nitty-gritty of the LC. By understanding the practice that should be followed by banks in the examination of their document, a beneficiary should be in a position to prepare the documents to that standard. Because these are the two ICC publication bank will use for examination of documents. So if you are aware that this is how the documents are going to be examined, it will be much easier for you to just check at the beginning, right? So reason for discrepant documents under LC, what could be the reason? So few of the reasons I have jotted down: lack of knowledge, lack of understanding of LC workflows and principles of UCP 600, could not understand the LC mechanism, underestimating the risk factors associated with the LC transactions, lack of attention to details and management of the production, shipment, and document collection process, excessive and unnecessary data mentioned in any of the document, and that will give a lot of unnecessary data. And this is one of the peculiar thing I have observed, that there was no need to mention all those things in invoice or maybe other documents, right? So unnecessary discrepancies have been raised due to those data which were mentioned in these documents, right? So try to avoid those. Now, common discrepancies, a lot of things we have already discussed. So few things are related to timing. You have not been able to present the document on or before expiry date of the LC. So expiry date was 31st December. You have presented the document on 1st January or 2nd January. LC is already expired. LC is no more in existence. Late shipment. Date of shipment is 15th January, but shipment affected on 17th January. So understand this. Okay, so it is related timing. Late presentation. What is that? Already discussed. Days will be given. Presentation period will be given. 21 days. Within that 21 calendar days after the date of shipment, documents need to be presented. If you have not, for example, if 1st January is the date of shipment and you go to the bank and present the documents on 24th January, expiry date is 31st January. But since you have presented the document more than 21 calendar days after the date of shipment, you have not been able to present the document on 22nd January because shipment date was 1st January. You have presented the document on 24th January. It is a case of discrepancies, right? Please avoid those things. And these all can be done if you focus that, boss, this is the timeline, and try to present the document well on or before that. Don't wait for last date to come, okay? With a significant number deriving from poorly prepared documents or presentation, including but not limited to, these are the common discrepancies we are discussing right now. Conflicting data between documents. So whatever data is mentioned in invoice, that is in contradiction, in conflict with the data mentioned in packing list. So not matching, it is in conflict. Not matching to that extent, that is not the case, but data in both the places, like it is mentioned in the invoice, gross weight is basically 500 kg, but in packing list it is mentioned 400 kg. So conflicting data, incorrect data. Whatever is asked, LC says you can say 200 kg. You can find that not 200 kg. It is 300 kg is mentioned, or any of the data which is mentioned in the LC has not been properly captured in any of the document. Missing documents. 4 documents were asked. Packing list is missing, which was stipulated, for example, right? Unauthenticated alteration. Documents would require authentication. Other than beneficiary, maybe there is a correction in the bill of lading. Then whoever has issued, maybe agent on behalf of the carrier or carrier has issued that bill of lading. If any correction is there, that need to be authenticated. It is missing. Missing or incorrect endorsement. If LC says draft need to be endorsed or bill of lading need to be endorsed, then that need to be endorsed as per LC requirement, and that is missing. Goods description not in accordance to the LC. So invoice should capture all the goods description exactly which is mentioned in the LC. Other documents may have goods description in general terms, but not conflict with the good description mentioned in the LC. So that could be one of the common, you can say, discrepancies. Port of loading or port of discharge incorrect. So many of the time LC says port of loading, Port Nhava Sheva, and you have shipped the goods from Kandla port. So it is not as per LC, right? So that could be the reason. Insurance document dated later than the date of shipment. So if insurance document has been stipulated, date of insurance document should not be after the date of shipment. So this is very important because if that is not there, it will be a case of discrepancy. Unclear capacity when transport documents are signed. Who can issue or sign transport documents? So always follow UCP guidelines. For example, if we talk about bill of lading, carrier or master, captain, or agent on behalf of the carrier or agent on behalf of the master, captain can issue bill of lading. Apart from these, no one can sign. Freight forwarder cannot issue or sign bill of lading. Freight forwarder can sign, but not as freight forwarder, can sign as agent of the carrier, for example, right? Partial shipment or transshipment affected despite LC terms prohibit. So these are common discrepancies. Quickly, we can see which are the document wise if we want to know. Draft. Please understand, draft is not mandatory in all cases, right? So draft is mandatory only when LC is available by acceptance. That is the only scenario draft is mandatory. In case LC is available by deferred payment, draft is not needed at all. And in case LC available by side payment and LC available by negotiation, draft is not mandatory. Means draft may be there, may not be there. So try to avoid the draft. That is the best thing you can say. But depend on the issuing bank. Issuing bank would usually stipulate draft as one of the stipulated documents. So if draft has been stipulated under LC, you need to present. As a beneficiary, we do not have any choice, right? So draft should ensure or determine that the draft appears to be signed by the drawer. Who will be the drawer? Beneficiary will be the drawer. That the name of the drawer corresponds with the name of the beneficiary. That it is drawn on the correct drawing. That the amount in words and figures correspond, same words and figures should match. That the tenor is as required by the LC. If it is site, then site. If it is 90 days from bill of lading date, that need to be captured properly in draft. That the name of the payee is identified or is issued to order. That it is properly endorsed if required. So how draft need to be drawn as per LC terms and condition. And there are no restricted endorsement, that it contains any necessary clauses as specifically required by the LC, and the amount of the draft does not exceed the balance available under LC, obviously, and value of the draft and invoice correspond unless a lesser amount is due. So these are the basically common discrepancies which usually you will find related to draft. What about other documents like commercial invoice? What are the common discrepancies? Invoice was not issued by the beneficiary, somebody else has issued. Invoice is not signed if stipulated in the LC. Remember, invoice need not be signed or dated, but if LC says sign invoice, which I was showing at the beginning, it need to be signed. Description of goods on the invoice does not correspond with the description shown in the invoice in the LC. Each and every word mentioned in the LC goods description need to be captured in the invoice. If it is not, then it is a case of discrepancies. Invoice is neither visaged or legalized as required by the LC. Totally, I mean, you need to prepare invoice based on the LC terms and condition. The legalization of the invoice is not in the terms required by the LC. The breakdown of charges is not shown as required by the LC, where LC requires CIF charges to be shown separately, like cost, insurance, and freight, separate you need to mention. The quality of goods shipped exceed the tolerance of 5% under UCP Article 30B. 30B allows, in case you do the shipment in, you can say, in kgs, gallons, tons, then tolerance up to 5% plus or minus in quantity is permitted, subject to drawings. Means you do not draw the amount under LC. That LC amount is not exceeded, then it is permitted, but you have shipped the goods which is beyond this tolerance margin of 5%. So that could be the reason for common discrepancies. Unit price is not as stipulated in the LC. So please understand, if LC stipulates unit price, you need to capture in invoice also. Partial shipment has been affected when LC prohibits that. Shipping mark and number on the invoice are in conflict with the shipping marks and number shown on the transport document. So these are basically common discrepancies you may observe, or if you take care, a lot of things will be taken care, right? So commercial invoice. What about bill of lading? One of the transport document I have taken. Transport document as per LC, you need to definitely present. Maybe it is a case of multimodal transport document, bill of lading could be there, or maybe non-negotiable CA bill or charter party bill of lading, or if it is shipment by air, then you will need to present airway bill, right? So depend, or maybe by truck, Kathmandu you are trying to export, then it will be lorry receipt truck, right? So that those, or maybe goods have been shipped in courier or postal, so those will be treated as transport documents. So we are discussing one of the transport document, bill of lading here. Port of loading different than LC, port of discharge different than LC, late shipment has taken place, gross weight is different in bill of lading from gross weight mentioned in packing list. Partial shipment affected if LC prohibits. Unclean bill of lading presented. So this is the concept. Goods, packaging of the goods should not be in defective condition. So that is important. Goods and condition of the goods and defective condition of the packaging of the goods should not be evidenced in the bill of lading. Otherwise, it will be a case of discrepancies. Carrier not identified and bill of lading not signed as per UCP 600. Cost additional to freight shown on the bill of lading. So if LC prohibits, then it should be avoided. Bill of lading shows intended vessel clause. So intended word will not work. Actual vessel name need to be there in the bill of lading. Bill of lading issued to order or to order of the shipper are to be endorsed by or on behalf of the shipper, and it is not done. Bill of lading should not bear any indication that is subject to a charter party. So anywhere, in case you find word charter party in the bill of lading, that is the case of discrepancy. Freight as per charter party. This is the case of discrepancies, right? Bill of lading must appear to be the sole original bill of lading, or if issued in more than one original, be the full set as indicated on the bill of lading. So this is very important. If LC says full set clean bill of lading, full set means all the original bill of lading need to be presented, right, to comply with the LC requirement. Insurance document, common discrepancies, lot many I have jotted down. Quickly we can go through. The currency of the insurance document is not the same as that is specified in the LC. The amount of insurance coverage is insufficient. LC says 110% coverage. LC amount is $100,000. You need to ensure that insurance document to indicate first currency should be in dollar as per LC, and 110% is the minimum amount you need to take insurance coverage. If it is 100,000, then 110,000 will be the minimum amount insurance coverage should be there. Goods description does not correspond to or is not quoted in general terms when compared with that shown in the LC. Start and end points of the insurance are not in accordance with the LC. Specific risks. So whatever risk need to be covered as per LC has not been covered in insurance document. Okay, so insurance document is not countersigned where such counter signature is required. Many of the insurance document will say this insurance document is valid only countersigned by X. Then you need to ensure that X also has signed. Okay, the insurance document is not stipulated in the LC or otherwise authorized by is not that stipulated in the LC or otherwise authorized by Article 28. So if LC says insurance policy need to be presented, but you present insurance certificate, then it is a case of discrepancies. But if LC says insurance certificate, you may present insurance certificate or you may even present insurance policy, that's okay. But if LC says insurance policy need to be presented, then only insurance policy has to be presented. If you present insurance policy, it is a case of discrepancies, right? All of the original shown on the insurance document as issued are not presented. So this is one of the discrepancies. Not issued and signed by. Who can issue insurance document? Either insurance company or underwriter or agent on behalf of the insurance company or underwriter can sign, or proxy on behalf of the insurance company or underwriter can sign insurance document, and that has not been done, right? So discrepancy should not include an expiry date for the submission of any claim thereunder. Understand, insurance policy should not have expiry date for claiming the amount. If such a date is mentioned, the document will be discrepant. Okay, so understand this different. If an insurance document indicates a date of issuance which is lesser than the date of shipment, such documents will only be acceptable if there is evidence thereon that coverage is effective from the date not later than the date of shipment. So understand this very clearly. If date of shipment is 5th January, insurance document should be dated on or before 5th January. If you have insurance document dated 7th January, where date of shipment is 5th January, means after the date of shipment, insurance document date is there, then you must ensure that insurance cover is effective at least from the date of shipment 5th January. Otherwise, if insurance document is dated after the date of shipment, it is a case of discrepancies. If LC stipulates condition, spelling mistake is there. If stipulates condition irrespective of percentage for insurance document, and most of the insurance document will have this wording. Not insurance document, but LC stipulation related to insurance document will have this wording irrespective of percentage for insurance document. Then as a beneficiary, you must ensure that insurance document not indicating that insurance is subject to franchise or excess of deductible. These all are common discrepancies, right? And few more we can take. Certificate of origin. What are the common discrepancies? Certificate uh, indicates the origin of the goods to be other than the stipulated in the LC. LC says India origin. Country of origin should be India. Certificate of origin is showing different country name, like that. Certificate was not issued by the party stipulated in the LC. So this is very important. Who has to issue insurance? Sorry, certificate of insurance. That person only need to issue that. Certificate does not indicate that it has been legalized or visas as stipulated by the LC. The certificate's legalization was not in the terms specified under the LC, and data on the certificate is in conflict with that date on other stipulated documents. So data which is mentioned in the certificate of origin is in conflict with the data appearing in other documents, maybe packing list, maybe bill of lading. Okay. And what about this certificate of weight? What are the common discrepancies? The weight shown is in conflict with that on the transport document or other stipulated document. The document submitted is not a certificate, but simply a listing. Whenever you will find the word certificate, please ensure that it is signed. Okay, this is the thumb rule you can take. If certificate word is there, then that document need a signature. Simple. The document indicates weight in conflict with that detailed on other stipulated documents. So weight is different in you can say weight list versus packing list, for example. The document contains data in conflict with that on other stipulated documents. So these all are basically very few common discrepancies I have jotted down for all the documents, right? Inspection certificate, common discrepancies. Certificate is not issued by the party stipulated in the LC. Certificate shows data in conflict with the description of goods in the invoice and or LC. The wording of the certificate is not as stipulated by the LC. So this is what common discrepancies and common discrepancies related to different things. Now the challenge is documents are discrepant. So you have presented the document to the nominated bank, and nominated bank has some in the document. They have told you documents are discrepant. What to do? What are the options available to you as an exporter or beneficiary of the LC? Okay. So not many things could be. I have jotted down only three, and it is advisable for all of you to just focus on this. What are the options you have? Correct the discrepancies by either amending the document or by replacement. So if they say that draft or invoice has got these discrepancies, change it. But that can be done when you have got the sufficient time available. If latest date already has been approached, maybe this is not possible. But if you find that boss, still time is there, you can definitely replace and change the discrepant document with the correct one. That is the first thing you should do. Then next could be request that nominated or confirming bank send a message to the issuing bank seeking approval to honor or negotiate despite the discrepancies that they have found whilst holding the documents with them. So what you can do, you are banking with bank A. Your bank A has raised the discrepancy. So you can request the bank A, please send one swift message to the issuing bank, mentioning whatever discrepancies you have jotted down. Don't send the document to the issuing bank. Send only swift message telling that these are the discrepancies, 1, 2, 3. Please allow us to, despite discrepancies, please allow us to honor or negotiate. So what that issuing bank will do, they have not received the document. What they have received? Swift message from the nominated bank, bank A. So based on the swift message, issuing bank will approach the applicant, and the applicant, if agrees to waive the discrepancies, issuing bank may say, go ahead. So maybe honor or negotiation can be done by your bank, bank A, nominated bank, despite discrepancies. That is the best thing you can do. If documents are discrepant and you are not able to rectify those discrepancies. And third option could be request the nominated bank or confirming bank to forward the documents to the issuing bank for settlement. You cannot rectify, the SWIFT message has not been sent. Tell them, just forward the documents to the issuing bank. But when you do, when you request this to your nominated bank to forward the documents to the issuing bank, please remember, never ever use the word on a collection basis or in trust. These wordings should not be there mentioned in the covering letter of nominated bank meant for issuing bank. These words should not be used on a collection basis in trust, should not be used in any communication between nominated bank to the issuing bank, as they imply that rules of documentary collection, it is not under UCP. That confusion may be there, are to be applied rather than the UCP 600. Therefore, it is very much advisable you request your bank. You can do the communication with your nominated bank, whatever words you want to use it. But when nominated bank forwards the document, they should not use these words on a collection basis or in trust. So remember that the respective parties could avoid or resolve many discrepancies through careful attention to detail in the LC application. Handled correctly, preparing and examining documents is valuable to the beneficiary, the applicant, and the industry. Okay. LC issued by non-bank through MT 710, precaution for exporter. Okay. So Indian exporters, while dealing in non-bank LCs, have incurred heavy transaction charges, and in some cases have also incurred total loss for exports. In many incidences, buyers either defaulted or just disappeared, leaving the exporters to realize later that the LC issuing entity, means a non-banking entity, is not creditworthy. So as an exporter, be careful if you receive any LC which has been issued by non-banking entity. Means issuer of the LC is not a bank. So many of the exporters, especially as MSMEs, SMEs, are unable to differentiate between the different format in which LCs are issued, specifically whether it is MT 700 and MT 710 format. So whatever we have discussed, we discussed about 700 format. Okay. These predominantly corporate LCs are advised by banks on their letterhead in SWIFT MT 700 format, and to all intent and purposes appears to be bank issued LCs with the requirement to present documents to the advising or transferring bank, where documents will be processed and payment made after receipt of funds from the issuer. Now the challenge is, you have received the LC, issuer of the LC is not a bank. And what will be the condition? Condition would be that they will make the payment. The guy who has advised to you, the bank which has advised, LC will be advised by the bank. Remember, advising bank will be the bank, but issuer of the LC, whoever has issued the LC is not a bank. And there will be condition that advising bank where you do the presentation will make the payment to you only when they receive the payment from the issuer of the LC. And that is the critical and dangerous part, because that is not a bank. What is the credit worthy of that bank, right? Often in such cases, the guarantee of payment is not normally by an independent third party. And as such, the credit risk is that of the corporate entity who is issuing the LC. Similarly, when documents are presented under LC for negotiation, that negotiation, if any, is based on the risk of the issuing entity, that is corporate, not bank risk. So due to this issue, there is one wonderful circular or guidelines have been published by ICC India, International Chamber of Commerce India, and FIDI. Okay, so I have just copied their guidelines and pasted here. Courtesy I give to ICC India and FIDI. They have come up with wonderful guidelines for all the exporter. I have just jotted down. You can Google it. You can go to the ICC India site. You can very much download this, whatever I have jotted here. Yeah? So checklist is there. Suggestion to the beneficiary exporter to safeguard their risk. So I thought, let me cover this here. Identify clearly which entity has issued this letter. So predict whether the issuing bank is a bank or a non-banking entity. This will be stated where? Field number 52A, issuing bank. Check the financial status of the issuing bank, LC issuing bank entity with your bank before processing the export order. So if you are not able to understand, no, just ask your bank. Take the help from your bank. They will be able to guide you in this. Who is the actual issuer of the LC? In some of the transactions, your buyer is in a different country and this LC issuing entity is in different another country. For example, your buyer applicant in the LC may be in UAE, the issuing entity may be in Gambia or Ukraine. So understand, usually LC issuing bank will be based in the buyer's bank, buyer country only. Okay, so if you are exporting goods to Bangladesh, usually Bangladesh bank only will issue the LC. But here, what is the situation? Applicant is based in UAE, but LC has been issued by the bank which is located in different country other than UAE. Check the commercial and financial status of the buyer, means importer. Check for reasons why any of the banks in the buyer's importer's country could not undertake its payment obligation. Why the person based in UAE is not able to give you LC issued by any bank based in UAE. Please read all the terms and conditions of the LC before processing the order. At times, the first advising bank which has transmitted the LC might have added its confirmation. This can be checked by reading field number 40A, irrevocable, adding our confirmation. In this field, in this case, field number 49 may state without. It means that first advising bank had already confirmed the LC and the second advising bank in India may advise the LC without confirmation. So you may get confused that this is the case of confirmed LC, but remember, advising bank has not added the confirmation. Advising bank means the bank which is located in our country only. First advising bank, which is incidentally the confirming bank, should be financially sound. We suggest you seek assistance of your bank for this. If you do not possess the ability to verify financial soundness of the first advising, please read field number 47A, additional condition. Details of dispatching the documents may be stated there. Successful completion of your transaction depends on your alertness in checking the financial background of the buyer. That is the first thing. And the LC issuing entity's financial status. So whatever has been jotted down here is courtesy source. This guidance not dated 30th November 2021 is issued without any risk and responsibilities either of ICC India or FEDI, and is solely intended to be a guidance document for the exporters, encouraging them to exercise basic due diligence and adopt appropriate precautions whenever they receive LC issued by non-banking entities and the exporters proposes to enter into any such contract, supplying goods against future payments, initiate and export transactions against such LCs or avail of finance against such LCs, if any. Okay, so you can definitely download and get this PDF file available in ICC India site also. So with this, I am done with my presentation. This is my contact details. So you can take the screenshot of this and I'll be happy to take all your questions, right?